Just let you know, my name's Zee Razaq. I'm Managing Director of SSAS Accounting in St Albans District. Do you want to press the next? So what we're going to talk about is not just the budget. What I wanted to actually talk about is real life, practical, how you use all the different structures. And we're going to be concentrating on property investors today because there's special rules, and not understanding this and not structuring is going to cost you a lot of money. That's all right. So this is quite a bit of difference maker. So we're going to concentrate on a few items and the key things, some OPCO, PropCo. Does everyone know what OPCO, PropCo is? Operating companies, property companies. Has anyone actually used them in that structure? Okay. So we'll...
Richest man in the room.
Love it. So we'll be going through those and then we'll talk about some exit strategies and a bit of a Q&A if Dan gives us some time at the end. Next one. So this is a bit of my background. So I've been in the finance industry, accountancy finance, about 20 years. I worked for some big known names. Probably the biggest one on there is probably Santander. I was managing a cost base of 2.5 billion. I saved them about 100 million quid for over 5 years. Quite complex organisation, and also given a lot of insight into banking. We run an accountancy practice based in sunny Harpenden. Has anyone been to Harpenden near St Albans? Absolutely. So we're based there. SSAS is a franchise and I own that particular one. Recent achievement, next slide, Alfie. Alfie is the guy that makes me look good, by the way, my marketing extraordinaire. So he's recording all this fun. So one of the humbler achievements is being able to be on Sky TV. Does anyone watch Property TV, Sky TV? Excellent. So we've had quite a bit of filming on there. So all those episodes, if anyone wants to see all the value, they're on our YouTube channel. You can access them for free. We talk about pensions, number of different aspects. Also, you might know one of the persons on there, the picture when I did one with John Howard. I don't know if anyone knows John Howard. People know John Howard. Lovely gentleman, very knowledgeable in property. And I think he did a presentation on one of the lunches. Next slide. So, what the big challenge is, this is the 4 things that I constantly see with entrepreneurs where they're not probably understanding and a lot of aspects. They don't actually know the difference normally between property investment and property development. Does everyone here know, I know I did a presentation before on this, do we know what the difference between an investor and a developer is?
What's the trading element and the other one's not a trading?
Very good point. So as a developer, if you're a property, we're going to be concentrating on property investors, but it's good to know the distinction. A property developer is someone who buys a property, holds it as stock, that's the technical term, on the perspective to add value and then sell it. Yeah, they're not holding it for rent. An investor holds it for rent. And believe it or not, that distinction is so important because it changes the whole of the tax treatment on running it and exit. And acquisition in some cases as well, because inheritance tax changes, capital gains tax, everything. So knowing that difference and getting the right advice from a property tax specialist or someone actually understands that makes a huge difference. And many people come unstuck. So I'll give you a quick example why that can be. So imagine I'm a developer, I bought the property, I put it in stock, and then I realise I can't sell it, and I actually want to rent it out and be an investor. That can, if not understood properly, trigger a dry tax charge. I've not sold the property, there's no relief or exemption to it, and I've triggered something called corporation tax in a company on the gain, i.e. from what I built it, or capital gains tax in my own name. So you've got to be very careful on this and make sure you understand that and get the right advice. So one of the things that we obviously try to help clients is manage their property portfolios in a most tax efficient structure and also make sure they maximise their profits. We plan the exit strategy and legacy planning. The key to all of this above is the right mindset. I know everyone goes on about this, but it's true. If you haven't got the right mindset and think as an entrepreneur, not just now, in 6 to 12 months or 3 or 5 or 10 years, whatever your strategy is for exit, you're going to find you're going to have a lot of pain. So you don't want to have that pain. You want to make sure you got value. So next slide, please, Alfie. So I love this saying, and everyone probably thinks, whether you think you can or you think you can't, you're right, Henry Ford. You've got to have this guy was a genius because that is so true. Because it is all in here. getting the right support structure. This is what Dan is doing here with SSAS London and many other people who are helping facilitate, enable this, is to help people understand the value of having the right professionals to support you in your business journey or entrepreneur journey to get a good result ultimately. Next slide. Right, so this is the normal thing that happens. So most people, when it comes to accountancy, tax, finance, first thing is they want to do nothing, which is probably one of the worst outcomes that you can do. Or even better, who's Googled stuff? Everyone's looking at it. Listen, that is what some people do, and then they say, well, Google told me. Didn't know it was 10 years out of date. I didn't even know what it was, but it said it on there. Unfortunately, HMRC don't use that as a defense. Another thing is people hire a generalist accountant. So if I go to a doctor, a GP, as Dan mentioned, didn't happen, but anyway. If I go to a doctor and I go to a generalist, they're going to give me general advice. That's why I called a general practitioner. If I've got a heart problem or something else, I'm not going to expect them to say, do you know what, Zee, sit down on a chair, I'm going to jump on, change over and start operating you on your heart, are they? That's not going to happen. They're going to send you to a specialist. Yet accountancy tax is probably as important as your health, because your financial health is as important as your physical health, but people just take shortcuts and they don't do this, and sometimes it's harder to change something that's already occurred than plan for it before it occurs. Hope that makes sense, guys. And then obviously hiring a specialist is quite important. Next one. So one of the things, and I'm putting a few quotes at the beginning here, this one is great, is loads of people, especially in property, because it's such a scary, sometimes a journey, people stop themselves doing things. And this is so important. If you want to invest, get a plan together, build your relationships, and actually have a timeline to action. Because it's easy to say, yeah, I'm going to do it, I've got all this knowledge, but not actually do it. And I think this is what this quote is trying to achieve. Next one. So, we're going to talk about the budget, but I'm going to then go into some of the other stuff. So who sort of understood a bit of the budget? Anyone? Was it boring?
Yep.
Well, I'm going to make it sexy now. Right? So it's not boring. If you understand what they're actually trying to... he's going to get me in trouble with my wife, this gentleman, honestly. Right, so the budget actually was quite a surprise, because the November one, which I did a winter seminar, a winter pro statement on Sky, was not that attractive. And one of the criticisms I did, maybe Rishi and crew were watching, I think they do, according to John Howard, that one of the two things they didn't look at, and this is what I'm covering, is pensions and capital allowances. And there's a big argument, why didn't they do that previously? And I think they just didn't have the Dutch courage to do it. And now they seem to have, because they may be voted out. Apologies if anyone here is linked to the Conservative Party. But this is some of the big changes. So the first... Sorry, is there someone linked?
John's not here with his Conservative
okay.
Party.
No disrespect. I know John's a big fan of... John Howard is, anyway, Conservative Party. I'm just saying they're in power, so we end up having to deal with that policy they make. The big one probably is on different ones, is obviously the pensions threshold increase. And the reason why I mention this, because I think Dan's had a few queries and people, that's going to be from 6th of April 2023. So you can't backdate 60,000, it'd be just 60,000 that year and 40k in previous years if you haven't used it. So for people, think about the 3-year rule that you can claim from previous years that you have not used, provided you had a pension in place. That will be based on 40,000 and 60,000 ongoing. So obviously, is there people who are husband and wife and run a family-owned business or invest together? Excellent. So double whammy, right?
Where's Leanne now?
100 and...
She's in Portugal and you're at an event.
100 so you can do 120k, which is going to be quite big, because everyone knows corporation tax is increased, and that's going to be a pain. I'm not going to get too much detail corporation tax here, because that's a conversation in itself. It's quite complex. For most affluent business owners, you're probably going to get whacked 25% or even 26.5% between 50,000 and 250,000 profit. The next one, people don't probably fully understand, obviously lifetime allowance. Is anyone close to lifetime allowance or got advice around being close to lifetime allowances? Everyone's shy here. People are shy. They don't want to say. Okay, no problem. So if you're getting close, right? This was a great budget for you because them wiping out. However, a bit sneaky, they didn't get rid of the 25% rule. So just to let people know, if you're coming up to 55 or 57, if you're a bit younger, because they've changed the rules, I fall in the 57, just to let you know. So you can take 25% out tax-free, right? And they've capped it at that amount, 25% of the 1,073,000. I know Labour, any people who support Labour, they want to reverse some of this. Get your skates on, use it properly while you've got the access, and then probably think about planning because they don't like this limit threshold that's come in, the unlimited amount. The other bit I want to touch, where's Usman? There he is. There's our superstar for capital allowances. One of the most understated bits, especially in my profession and many property entrepreneurs, if you're buying commercial property, service accommodation property or furnished holiday lets, you've got to get this evaluation done before you buy it. Because if you don't, and you don't understand, you're going to lose a lot of money. And I've seen so many people not understand how to use that £1 million allowance. Does everyone know you can earn £1 million tax-free in the UK? Still. We know how to use that? Well, we're going to learn a bit more if we don't. It's so important. But also the last 2 points, this new rule, fully expensed. Does anyone know about fully expensed budget? Maybe. So we had a super deduction. Did everyone hear about the super deduction? Did anyone use the super deduction? Because I've got Usman, if everyone's lying, he'll check out for us. So the super deduction was valid up to 31st of March. And the reason why that was beneficial is if you're refurbing a property in a limited company, right, you can claim for every £100 you spend, £130. Actually, what's happened is this fully expensed is actually the same amount. Because corporation tax has gone higher, it's giving you 100% relief, which is actually the same. And you've got to do it in order. The last one is things that people don't really fully understand. This is stuff that you can't claim a fully expense on, such as cars, and we'll get a slide on cars a bit later. You can claim something called a first year allowance, but it's only up to 50%. Electric cars are an exception in a limited company. You can actually get a full 100% deduction if you do them properly and buy them, without a big benefit in kind rate. Next slide. So what I want to do is give 2 examples how to use PropCo and OpCo after the intro that I've just done. So the first example is, has anyone got an LLP, limited liability partnership? Do we understand the power of these? Okay, we'll see now. Right, LLPs are the most underused tool, but people don't realise to earn £1 million tax-free, you've got to have one of these bad boys. Got to have them if you're investing in commercial property, especially, because and the other one I'm going to do about keep Lars, everyone happy. I love SSASs, a big fan of those. Using OpCo, PropCo, using a SSAS as well. In the case that we're going to be using is where a husband and wife buys £1 million property, claims capital allowances after seeing Usman, and the accountant tax advisor should prep that first, get Usman in there to claim on the actual purchase. I'm putting a number out there, average 25%. That's 250,000 tax-free, and you can roll it up to £1 million in 1 year if you know how to. Next slide, please. So I saw I'd done this little diagram. Hope my design skills are quite good, hopefully, I don't know. I'm using an LLP and a limited company to summarise the benefits. Right? The LLP can earn £1 million tax-free because what happens is that even though you're making profit, say on a £1 million property I was making a 10% yield, I was making 100 grand profit, right? Normally, you probably don't want it in LLP because you're going to get hit as an individual. However, if you've got capital allowances and I've claimed 250 in the first year, I can offset that. So in my pocket, because LLPs are what we call a bit of a technical or tax transparent, i.e. we don't have double taxation, you only have personal taxation, you don't have company, we can use that and therefore earn the tax-free income. And I'm going to get on to the second point about no benefit in kind for the partners a bit later. Does everyone know what benefit in kind is? Benefit in kind is when you use a company asset personally and then they trigger you off for income tax, employer national insurance, all that fun. LLPs, if you're actually a profit sharing partner, you don't have that. Big advantage, and we'll get onto why later. You can compound outside tax, so therefore you can scale the business much quicker if I'm not losing 50 to 60% in tax. And that is quite a powerful thing with these LLPs until you use it. You can also do, depending on your circumstances, preferably with commercial property and service accommodation, provided it meets the criteria. Furnished holiday lets don't allow you. Does anyone have a job as well? Anyone work in employment world? Okay, if you're working employment world, we can actually offset the loss and claim back your income tax from your job as well. How much do you love that? We'll go for an example. The next bit is the limited company. The reason why we're doing OPCO and PropCo here, the limited company is OPCO, is because you can actually have some other advantages, especially if the limited company was a trading business as well. You can offset some of these cost of your rent against your business expenses. The reason why we have OPCO is over here, everything is subject to inheritance tax. Over here, because it's a trading business, depending on how you set the agreement up, you can do up to a 15% management fee, right? This example is paying zero tax, by the way. That's why I'm doing it this way. So over here, you pay zero tax on receiving the money in your pocket. This is for income generating. Over here, we run a management company, and therefore any money that we're taking out of the LLP as a management charge is obviously going over here, and that's outside inheritance tax, because trading businesses, i.e. management companies, specifically outside the scope of inheritance tax, they get a special relief. So you whack it over here. And the other thing is, over here, if you're making profit, you can actually contribute from the limited company into your pension. So that becomes zero tax over here, less your expenses. And also, if you do it properly, depending on the legal agreement, you can actually split the responsibility, liability. So you're double sheltering your asset from getting attacked. And I think that is quite important. Sorry, go on.
Question for you. So all good with the setup, but if the LLP, if the PropCo was an LTD instead of an LLP, what exactly do you lose? Because you still get capital allowances.
How do you take the money out?
Okay. Is that the difference?
So when you really good question, by the way, GP, love that question. Should have saved it. We should have saved it for the clips later. So you can't. Really good point, and we'll do the questions, and we'll get the recording, so we'll get it for LinkedIn. That's a great question. We'll explain it later in detail. Next slide. That's a fantastic question, actually. I had to put the cars on. Guys love the cars. So an LLP, go back to the company tax. Hopefully I'm still in scope there. Won't get no benefit in kind tax. So benefit kind tax, if you buy that company car in the limited company, the one on the left is actually fully electric. It's very low benefit in kind. You'll pay income tax on a value that's associated to that company, and also employer national insurance. But in an LLP, there is no benefit in kind if you're a partner of the LLP. So you can put that into the LLP, right? Any one of those, to be honest, right? And I would lease them, because if you lease them, all your business miles. So imagine I did 10,000 miles in a year and 6,000 were business. That means 60% of all my costs are tax deductible against my LLP. So my LLP can pay for some of these nice vehicles that I put on there. Love that part. Next slide. So I've done this little scenario. I think you might know who these people are. Does anyone know who it is? Good old Rishi Sunak. We've got old Phil and Mrs. H. Hope they're not watching this one. So Rishi and Mrs. Sunak are quite tax savvy, as probably people will know. So in this case, I've given a simple example. They're earning the £1 million, but they've got 50k salaries, right? Each, right? If they invest in an LLP and combine it, they can then offset against their employment income any loss, and they will have a loss because the 100 grand will knock off against the capital allowances, but it still leaves 150 grand. It is capped up to a certain amount depending on your salary, but you can then use that loss, offset against your salary, and claim back the income tax. Next slide. So this is some numbers. It was based on 1920 because we've done so many of these. In this case, if you had spreadsheet Phil buying it, he wasn't that savvy on tax. He got the whole 100 grand in his own name. It was a bit selfish. So he got whacked, lost his personal allowance, and got quite a bit of a tax bill. In his scenario, by spreading it to the husband and wife, we're saving 70 grand's worth of tax in your pocket. Next slide. There is a benefit of national insurance, but that's a bit more advanced for this presentation. So we're just going through all the different stuff. So when you claim the capital allowance, just what I said, this is what you end up saving in this scenario. Next one. Can we go further? That's the sideways relief against employment income. Yes, we can, but I would always take advice. I'm talking at this at a high level. Everyone's scenario is different. You need to be careful because you can actually lose your personal allowance if you don't know what you're doing. Next one. Right, next one, which everyone here loves SSASs. Who doesn't love SSASs?
Everyone, put your hand up, please.
Come on, come on. Oh my God. Oh my.
Everyone, please put your hand up.
Do you love SSASs? Perfect. Right. So where there isn't capital allowances and Usman can't do his magic, the SSAS can become the propco, the property company. Right? So you can use it in tandem with a limited company, and there's a whole lot of benefits here as well, which we can go through with them. Obviously, the SSAS doesn't pay no income tax, corporation tax on the rent. It can scale quicker because obviously it's paying no tax, so it's going to compound. It can sell the assets CGT free, and also the dreaded inheritance tax, which everyone hates. There is none. So legacy planning becomes a lot better with a SSAS. You can still use the OPCO-PROPCO principle, and the big difference here is obviously when you've got a SSAS, you could do a potential loan back with security. There is a bit of criteria that you've got to meet, but if you do that, you can access the funds, right, through your limited company. You generally need to be a director of a limited company to be able to have a SSAS, which many people will probably know. So you can use these OPCO-PROPCO scenarios so efficiently, and there's many other variations, by the way, of this. It depends on your circumstances. These are the two big ones for me, where I see a lot of people who say they understand OPCO-PROPCO. They don't really, because they've not really seen it this way practically. It's actually applying this stuff to your circumstances. This is about giving you ideas. I hope I am. Next one. So after you've done all this fun and we've generated income, sorry, the difference between the two OPCO-PROPCO, one is for income, i.e. LLP, the other one is for wealth, because your SSAS is one of your best assets to grow wealth. I'm sure Lars is loving that, because it's true, because I've got one, and that's how we work with all our clients. You want to grow your wealth. If you haven't got a SSAS, you're missing a big trick. Okay, so I was doing another example here, right, is unfortunately LLP in this case, if it's a property company, has inheritance tax issues. So what we can do is, if once we've used up all the capital allowances, gotta love this value, you can actually incorporate it, move the LLP into a limited company. And we do something called incorporation. It has to meet certain criteria. You need to have accountancy, tax, legal and financing understanding. Fortunately, we have all of that. We use tax barristers as well as are doing our aspects, because you need all those components to work together. And what you're doing is, when you incorporate, so imagine I bought the property as $1 million and now it's worth $2 million, right? Imagine it was service accommodation, furnished, holiday lets, whatever, and I've had enough now scaling. I'm not going to buy more to get capital allowances. I don't want to get caned on my taxes. I want to incorporate. Provided I meet the criteria, I can incorporate those into a limited company. Hope everyone's sitting down. It's now going to be worth $2 million. I've just washed out all the capital gains tax. Right? And if I do it properly, there's no stamp duty land tax on incorporation of a partnership, provided it's done properly. That's why an LLP has so many benefits. And you can bring your other business partners, your beneficiaries into the LLP and then incorporate, and that will take up the makeup of whatever the LLP position is at the time. The capital gain rebasing, the CGT incorporation relief, the CGT rebasing, stamp duty land tax, I think I mentioned. The other thing, where's Alex? Financing, right? If you finance this correctly, right, is that the property business, when you're moving it over, if it's got some money left, that's part of the cost that you initially did and it hasn't been mortgaged out, you can take an overnight bridge and create a director loan account. A lot of people miss this, because if I put the properties into a limited company, do you want to whack the next slide? We'll go through some numbers or something. Next, I think it's decided to keep on going up. Oh, does it? Right, so this was one that we did. I think we saved them about £2.5 million on this because the cost of property is a lot. So what you can do is, imagine my property, I bought it for £1 million, but I only had financing at £500,000. Now it's worth £2 million. That £500,000 to £1 million, I can actually take out an overnight bridge and create a director loan account in my limited company. That means I can pull the money out if I ever sell that property or the rent tax-free. And if I sell it, long as it's not everything on day one, because there is some anti-avoidance measures, because if you're just doing it for this purpose or selling, it's probably not a good idea, is that I can sell at the new base cost value because the balance sheet is now showing 2 million, not 1 million. So I only pay corporation tax, because that's what you do in a limited company when you get a gain, on the 2 million, uplift on the 2 million. So hugely beneficial. So this was one example where we did, this gentleman had loads of HMOs and he met the criteria. We did the incorporation and you can see the inheritance tax protection because you can set it up as a family investment company. Has anyone got a family investment company or smart company? Excellent. Love it. Love it. And the reason why they're really beneficial, if set up properly, is your legacy is protected. The future inheritance tax ain't going to happen. You have to use different tools to attack the current inheritance tax if you've left it for a while, because that freezes the value. So all the growth shares take the future value. It is a highly complex area, but it is really powerful. And I've sort of put some numbers over here of what it can be, because the growth of properties, as everyone knows, every 10 years they generally double, and that's been the case for quite a lot of years. I don't know how long that will continue, but they are growing, especially with inflation. Next slide. Big breath, have a bit of water. Right, let's go into the last bit. So, I think this statement from Rita Mae Brown puts it in a nutshell. If you do not change your mindset and actually understand what I've just talked about, or understand some of the other great speakers that Dan has, and try to incorporate just that knowledge or get that support, you're just going to get the same results, aren't you? You know what I mean? It's like trying to play a football game. I'm a big fan of Man U, and I don't care anyone boos, I still am, right?
What's Man City on again in the Champions League?
Well, it's chased when we get the money from the Qatari people, but anyway, right. So the big challenge of it is really that if you don't train, improve your performance by opening your mindset, you'll just get the same results, or you'll probably, in the current economic climate, have a non-viable business because the cost of finance increase, the cost of taxes increase, the cost of utilities increase. We're now tacking back by using these structures, understanding the tax code. The UK tax code is one of the most complicated tax codes, especially for property entrepreneurs. I haven't talked about VAT, that's a whole different world in itself. But you have to understand all of these related to property. Next one. Bit of a picture of the key people. So when I took this picture, it was actually last November, so we had fireworks. So that's my two sons, my mum, my wife, and we're visiting the old fireworks display there. But the whole reason for this is one thing I talk about people, and did a podcast today, so if anyone do subscribe, we're going to put that podcast out. Unlocking financial freedom is about the mindset. And if you get that and get a good network, that's the whole point of all of this. Meeting new people, developing your network, getting strategic relationships, trying to help each other succeed, that's how you get ahead. And anybody I have seen successful, and I'm fortunate that I do have some celebrities as clients, as Dan will know, and some of those people, they didn't start with millions in the bank or hundreds of millions in the bank. They started with zero, most of them, and they believed and backed their ability. They built a network, they invested in knowledge, and that's why they became successful. There is a plan for that. I think it's pretty much. So conclusion, love all this. These are the key things that you've got to think about when you're structuring, taking advice. I've given some scenarios. It depends on your own circumstances because everyone's circumstances are different. So you need to have an evaluation done, understand that, get good advice, and then understand the journey. Because this isn't, people think being an accountant, tax advisor, business advisor is an annual journey. No. It's 5, 10, 15, 20-year journey. It depends on when your exit is, and you need someone who knows what they're talking about, knows what you want to achieve, and then maps that journey, and then sticking to it. And if there's any adjustments, you know why you're making those adjustments. And unfortunately, there's a challenge in my profession because due to the pressures, not everyone has different expertise, right? So you need to know what your strategy is. If it's property, you need to know someone who knows property, because every industry is different. Hopefully that sort of made sense where I've gone, and I think that's it, is it? And now we can get to the Q&A. These are our contact details, so if anyone who hasn't followed us on LinkedIn, please do. You can follow us on LinkedIn. You can also follow us on YouTube as well. We've got the inquiries, email, there's our phone number. I think we can share this stuff or share some contacts on the WhatsApp group. Is everyone on the WhatsApp group?
No, just a select few.
Okay. Okay. So I would recommend that if you do want to keep up to date, because I always whack some posts on WhatsApp and things like this, you're getting so much knowledge, because not bigging up people here, some people are very talented and they've got a lot of knowledge and they share it. So learn from them. Learning, there's nothing wrong with that. Learn, improve yourself, and then hopefully, God willing, you will be successful. Should we do a Q&A if we've got time, Dan? Have we got time for a Q&A?
Yes.
Excellent. So Alfie, because I've got this little device here, because this is going to go on social media. Anyone who's happy, let us know that. Question, I think GP had a question. If you put it to GP. And then he can ask, if you can let Alfie get past, that'd be great. And you don't have to put it on, you can just talk straight into it. Don't drop it, I'll charge you later.
Thank you, Zee. About the PropCo-OpCo setup you were describing earlier, you put the PropCo as an LLP and the OpCo as an LTD. You were mentioning capital allowances. Would you explain why the LLP over the LTD is preferential for the PropCo?
So if you've got fantastic question, love that question. The reason being is limited companies, you may say corporation tax because of the capital allowances, but you've got to pull the money out. You're going to pay personal tax on pulling the money out. With an LLP, you only pay one tax, personal tax. Generally, limited companies are preferable, but in these circumstances, they're not. That's why I use the LLP. You can't do a sideways relief from a limited company. It's a separate entity. So there's a few disadvantages of limited companies in this scenario. Did that make sense for everybody? The difference between LLPs and limited companies, when you're a property investor, it's a whole different ballgame. No? No, it did make sense. Anybody else? Please do ask questions. Yeah, there's Usman in the back. Let's get him the thing over. It's good. Wait one moment, let Alfie, because we're going to get all of this. Hopefully it's in there. Alfie's going to get super fit today. Thank you, Alfie. Because later people can't hear what question you asked.
Just going back off of what GP said, are you able to just go through the ins and outs of sideways relief for the LLP for those in the room that is relevant to?
Say that again, sorry.
Sideways relief, yeah? For
sideways
the LLP.
relief,
Can you just
okay.
go through the ins and outs of that for those that is relevant to? And
so
it's mainly for people who are doing PAYE, obviously.
Absolutely. So sideways relief, if you've got employment income, you're in a job, right? If you make a loss in an LLP or a partnership, where it's commercial property or service accommodation, I emphasize those two, you can do something called a sideways relief. And what you can do is claim some of that loss that you haven't been able to offset against the rent in that year against your employment income. So if I'm earning, say, 50,000 or 60,000, right, I can take up to at least 50,000. And then there's special rules above 50,000 on sideways relief because it depends on your income. And what happens is when we use the tax return, we obviously make representation HMRC via that, and you can then claim back your income tax because your taxable income is gone from whatever it was on your P60 to a lot lower because you've offset that loss. That is the power of an LLP in this circumstances. And I've had many clients who have not understood that. I'll take it one step further, a bit more value, is that if you are combining that, depending on your income, it really depends on your income, with pension contributions, do salary sacrifice if you're in a job. The reason why is you save national insurance as well. I bet you can't win that. You've got income tax saving, you've got national insurance saving, You get your child benefit back as well, by the way, if anyone's a parent. If you're a parent and you earn, your taxable income has to be over 50,000 before you lose child benefit, not your gross income. So it's very important. So you can actually claim child benefit back as well. Some more value for you guys. Next question. Alfie, just get over there. Thank you. We'll be sharing all of this stuff on social media so you can see all of these. That's why we wanted to do this, show the magic value that Dan's creating here.
Yes, it's all me.
It's all you. It's all you. Go on.
Great presentation,
Thank
Zee.
you so much.
Really enjoyed it. Yeah, obviously, so much detail there, which is
Apologies.
the specialist knowledge that you have. My question, I guess, is when is the right time to be thinking about putting all of these structures in place to get the kind of the long-term benefit? Because, you know, every member of the audience maybe is at a different stage of the game in terms of their business, their age, their life circumstances, and all the rest of it. When would you say is the right time to be thinking about getting all this stuff right?
Ideally, as soon as possible at the beginning. But if you've already started the journey, what you need is an evaluation and an understanding of where you're going to get to. Because these structures are only relevant depending on what you want to do and how committed you are. For example, if you set up an LLP and you didn't check with Usman that you can get capital allowances and your accountant tax advisor actually knows what they do at the start process and the end process, you're not going to get none of those benefits, and you're going to get killed on income tax, right? Because you're going to be paying income tax on all your profit. So getting that knowledge and advice on your situation, I say, especially family investment companies, depending on how serious and how big you want to scale it, early you start something, you can receive those benefits, whether it's income generating, wealth generating, or even protecting your legacy. You can get those started quite quickly. And they are specialist knowledge, and I know I shared a bit. I hope I didn't overwhelm people. I didn't want to get into property development, which we did in a previous presentation, because it's a different world. So I try to explain what property investment, the benefits, and maybe if Dan still wants to invite me back, we'll do a property development one separately, because there is a lot of information, hence why we're recording it. Is that okay? Does that answer it?
It was great, yeah.
Thank you. Alfie, I think we've got someone over there. Bye. Please, one thing, do say your name, so we know, I know who I'm speaking to. If that's
Hi,
okay.
I'm Aisha.
Sorry?
Aisha, that's
Aisha,
my name.
okay.
Yeah,
My sister's name's Aisha, so carry on.
popular names. I wanted to ask. So you're talking about setting up your business structure to benefit you in the future. So let's say if you're at the start of your property journey and you're in full-time employment, but in the future you don't expect to be. Would you advise against an LLP in such circumstances?
No, I would try to do that when I start, because that's why I was trying to say income and generating wealth, it really depends on where you are in that cycle. The LLP will help you generate tax-free income, yeah, and some wealth, but the SSAS and potentially limited companies will probably help you protect your wealth and generate wealth. So it depends on employment, how easy is it for you to leave employment, if that is what your plan is, to get into being an entrepreneur. And anyone who started being an entrepreneur, it is a challenge, especially with all the different things going on. So you need that cash flow, don't you? Because if you've got no cash flow, you've got no air to breathe. So you need to create cash flow first, so important, and then generate wealth. That's my advice, and the people I've seen successful, because no cash flow, no business, no nothing.
Yeah, so I agree with that. But what if you expect? What if you expect to have the cash flow in a few years to leave your employment? Would you still recommend going down the NLP route?
It depends on what your property strategy is.
Okay.
So if you're going to invest in commercial property, there's something called, does everyone know there's something, when you go to buy commercial property, there's a certain form that you need to get your tax advisor to look at. It's called a CPSE, Commercial Property Standard Inquiry. I'm going to do a presentation from a big law firm in a few months' time, and they will like the legal side talk about, because they're a trigger point. If you review that, then you can make the right decision depending on what acquisition you're doing. Yeah, because different properties or different property strategies have different implications. If you said to me, Zee, I'm going to buy loads of buy-to-lets, I'll probably think, don't bother an LLP, do a limited company and maybe set up a family investment company if you're doing HMOs and buy-to-lets, because they've got different tax rules, different impacts. If you say to me, Zee, I'm doing commercial property, service accommodation, furniture, holiday let, I'm thinking, hold on, can we do a claim here? I'm calling Usman up, we're having a chat, we're going to look at the pictures, we're going to get him out there and get all the value. And this is depending on your property.
On your strategy.
So important.
Yeah.
And your long-term objectives. This is why you need to have a consultation valuation, because I know I'm blurting out a few different strategies, but you need it custom made to your specific circumstances.
Is that what your company does?
Yeah, we do the strategic consultations, we call them. They're 400 quid, you come to offers, or we do via Zoom. We do a fact find beforehand and make perhaps, as long as we can help you, and then we can advise you based on what you want to achieve. These are the steps that you need to do. Okay. Right, and then if you need written wise, it's done separately, and you need implementation, obviously it's done separately, because it depends on what you need implemented and when do you need it implemented.
Okay, thank you.
Does that answer? There's a lot of things there. Does that answer your queries?
It does, because what you said contradicted what I initially believed, but then when you explained it's down to your strategy, it makes sense, because
Okay.
So
don't want
it
to
does
contradict
make sense.
anybody,
No,
upset anybody.
You've not. It's good. It's good I
Okay.
asked the question, because you gave me that clarity to understand it a bit better.
Thank you so much. Have we got time for any more questions? Anyone else?
I took a picture so I remember it. So hang on.
Okay.
So on your slide, you mentioned super deduction.
Yes.
And said for every refurb you do, you spend 100 quid, you can claim 130 back.
It depends on after a capital allowance survey, yeah.
But you're about commercial.
Commercial,
Okay.
what is qualifying, but also you can do it on service accommodation furnished holiday lets that you buy in a limited company. And that was up to 31st of March 2023.
Okay.
Right?
I thought you said residential in it. So I was like,
Yeah.
what?
Yeah, because you can. And that's where you get Usman, because Usman will explain in super detail on the capital allowances bit, because some of the stuff is not allowable when you do structure changes. So that's why he has to come in, evaluate what the number is. Yeah, because it varies depending on the work that you're doing. So that's why you need the capital allowance report to say, this is what we can do. So I'll give you an example. I just did one for a firm of barristers. They bought a massive property and they newly built, not second hand. They actually claimed a super deduction on the purchase for the qualifying capital allowances. They would have got more if they went to Usman. That was my view to him. I did say to him, get the best in class, you get the best value, right? They did that, but they also then claimed on the refurbs where they put the equipment in as well. So they actually benefited on getting a super deduction on both, which is quite unique. Normally when you buy it, you have to claim the annual investment allowance, depending on the circumstance, if it qualifies or not.
So in your business, do you just offer the advice or do you do the accountancy as well?
Yeah, we do accountancy, tax advisory, business advisory, the lot on property. We also give advice around pensions, which is quite unique for especially SSAS pensions, because I'll be honest with you, I'm not interested in SIPs, because I don't like being a... Eh?
I'm going to launch SSAS London.
Oh, don't be in a nice possible way, when you do a SIP, and Lars will probably add some views on this, is you're squatting on someone else's infrastructure. Yeah, because there's a lot of things you're allowed to do in SIPs.
Word from squatting.
Am I not allowed to say squatting? No? Okay, you're on someone else's infrastructure and they may tell you to get lost later. Because when you pass away and things like this, they don't want to know you or your family. And that's what happens in the real world. It's not what's in the tax code, it's just that 95% providers of SIPs have decided to go down this, and all they want you to do is invest in shares. We're entrepreneurs. I try to think about property and different asset classes that are going to grow wealth. Sorry, have I answered your question?
Yeah.
Perfect. Anybody else before Dan calls it a day? Oh, perfect. Got one more? GP? No? Okay. Perfect. Thank you guys. Really appreciate it. And thank you, a great audience. We'll get some pics taken later.
Cancel SSAS London.